What if I told you that you could lose your home? Not because you missed a mortgage payment, but because you didn't fully understand property taxes. And here's the kicker. Most homeowners have no idea what they're really paying for, or why the bill keeps rising every year. But today, we're going to break it all down in plain, simple language. No jargon, no confusion. You'll finally understand what property taxes are, how they're calculated, and what sneaky things can make them go up or down. And stick with me, because there's one common mistake almost every beginner makes that could cost you thousands of dollars. Let's uncover it. Number 1. What are property taxes really? Property taxes are local taxes you pay on real estate you own, like your house, land, or even a rental property. These taxes help fund your local community services, like public schools, fire departments, police, roads, parks, and libraries. Think of it as your way of pitching in to keep your town or county running. Now here's an example. Let's say you own a small house. Every year, the local government sends you a bill. That money goes to help pay the salary of the teacher at your neighborhood elementary school or repair that pothole on your street. You don't get to choose what to pay for, but you're helping keep everything running. Number 2. Who decides how much you pay? This is where it gets interesting and a little frustrating. The amount you pay in property tax is based on two things: your property's assessed value and the local tax rate. Assessed value is what the local tax assessor thinks your home is worth. It's not always the same as the market value. In fact, it's usually lower. Let's say your home could sell for $250,000, but your assessor values it at $200,000. That $200,000 is the number they use to calculate your tax. Then there's the tax rate, also called the mill rate in some places. It's usually a small percentage, but when applied to big home values, it adds up. If your tax rate is 1.5% and your assessed value is $200,000, then your tax bill is about $3,000 per year. Pretty straightforward, until your home value or tax rate goes up. And guess what? They often do. Number 3. Why does your property tax bill keep rising? Many homeowners are shocked to see their property tax bill climb year after year, even when they haven't made big changes to the house. So what's going on? Several things. First, if your home value goes up, your tax goes up. Second, if your local government increases the tax rate to fund new schools or services, your tax goes up. Even new construction nearby can impact your tax. If your neighborhood becomes more desirable, your assessed value might rise, even if your home hasn't changed at all. And here's a twist. Even if your house value goes down, your tax bill might stay the same, or even go up. That's because your local budget needs still have to be met, so they just shift the rate to make up for it. Number 4. What happens if you don't pay property taxes? This is where the stakes get high. If you don't pay your property taxes, you could eventually lose your home. Seriously. Unpaid property taxes can lead to a tax lien. Basically, a legal claim the government has on your house. If it goes on long enough, they can sell your home to recover the money. Yes, your home, even if you've paid off your mortgage completely. This is especially dangerous for people on fixed incomes, like retirees, who may struggle to keep up with rising taxes. One overlooked bill can turn into a nightmare. Number 5. How do you actually pay property taxes? In most places, property taxes are billed once or twice a year. But there are two main ways people pay them. Option 1. You pay the bill directly to your county or city. You get the bill in the mail, and you send in a check or pay online. Option 2. Your mortgage lender pays it for you from an escrow account. This is more common. Each month, you pay extra along with your mortgage. Your lender puts that money aside and pays your property taxes when they're due. This can make it easier to budget, since it spreads out the cost. But don't assume they're getting it right. Always check your statements. Number 6. Can you lower your property taxes? Yes, and most homeowners don't even know they can fight their tax bill. If you think your home is overvalued, you can appeal your assessment. Here's how it usually works. You review the assessor's estimate of your property's value. If you find mistakes, like an extra bedroom listed that doesn't exist, you can challenge it. You may also find that similar homes in your area are valued lower. That's evidence you can use. If your appeal is successful, your assessed value goes down, and so does your tax bill. It doesn't always work, but it's worth trying, because you could save hundreds or even thousands of dollars a year. Number 7. Why do property taxes vary so much by location? Have you noticed that two identical homes can have totally different tax bills just because they're in different towns? That's no accident. Property taxes are set at the local level by cities, towns, counties, and school districts. That means each place decides what services they'll offer and how much they'll spend. Some places invest heavily in schools or public transit. Others don't. That spending affects how much they need to collect in taxes. So moving even a few blocks over can change your property tax by thousands of dollars a year. For example, New Jersey has some of the highest property taxes in the USA, while states like Alabama and West Virginia are much lower. It's all about local priorities and budgets. Number 8. What are property tax exemptions and how do they work? Property tax exemptions are like discounts. They reduce the taxable value of your home, so you pay less tax. The most common is the homestead exemption. If you live in the home you own as your primary residence, many states will give you a break. For example, if your home is valued at $200,000 and your homestead exemption is $50,000, you only pay tax on $150,000. Other exemptions exist too, for seniors, veterans, disabled homeowners, and low-income families. But here's the thing. Most of these exemptions are not automatic. You have to apply, and if you don't know they exist, you could miss out on years of savings. So check with your local tax office. It could save you a bundle. Number 9. How do property taxes affect renters? You might think property taxes only matter if you own a home. Not quite. If you rent, your landlord still pays property taxes. And guess who ends up covering that cost? That's right, you. Landlords usually factor property taxes into the rent they charge. So rising property taxes can lead to rising rent. Understanding how this works gives you more power as a renter. It also helps you evaluate why your rent is increasing and whether moving makes sense. Number 10. What's the big mistake that could cost you thousands? Remember that mistake I told you about in the beginning? Here it is. Ignoring your property assessment. Every year, your local tax office sends out assessment notices. Most people just toss them in the trash, but that's a big mistake. Because that notice tells you what the government thinks your home is worth, and that number directly affects your tax bill. If it's too high and you don't challenge it, you could overpay for years. Let me say it again. Always read your property assessment. Check it for errors. Compare it to similar homes nearby. If something looks off, challenge it. It could be the easiest money you ever save. Number 11. What is a property tax reassessment and when does it happen? A property tax reassessment is when your local government updates the assessed value of your property. This doesn't happen every year in most places. It might be every few years, or only when the property is sold or significantly renovated. The goal is to keep the assessed value in line with the actual market value. Let's say you add a second floor to your house. A reassessment will likely happen, and your tax bill could jump. But reassessments can also happen even if you didn't change anything. If the market goes up, the value of your home may increase. And when that happens, your taxes usually follow. So pay attention to reassessment notices and timelines in your city or county. Number 12. How do property taxes work in condos and townhomes? If you live in a condo or townhome, you still pay property taxes, but instead of owning the land beneath your unit, you usually pay tax on your portion of the building and shared spaces. The value is based on your specific unit size, location, and features. Some condos also have extra assessments from homeowner associations, but those are different from property taxes. And just like with single-family homes, you can often appeal the assessed value if it seems off. So even if your home shares walls, your tax situation is still very personal and worth reviewing. Number 13. Are there states with no property taxes? The short answer is no. Every state has some form of property tax, but the amount can vary a lot. Some states like Hawaii, Alabama, and Colorado have very low average property tax rates. Others, like New Jersey, Illinois, and Connecticut have some of the highest. But even if you move to a low-tax state, it doesn't mean you'll pay nothing. You still need to budget for it. And low property taxes might come with trade-offs, like fewer public services or higher sales taxes. So always consider the whole picture when thinking about relocation. Number 14. What's the role of the tax assessor? The tax assessor is the official responsible for estimating the value of your property. They're usually a part of your local government. They don't set your tax rate, but their job directly impacts how much you pay. Assessors use recent sales data, property details, and sometimes in-person visits to come up with your property's assessed value. They might not enter your home, but they can see additions, renovations, or improvements from the outside, and they usually assume upgrades have been made over time unless told otherwise. That's why it's so important to review their assessment. If they got something wrong, you could be paying for features you don't actually have. Number 15. Can property taxes ever be paid off completely? This is a common question, especially from retirees or those with paid-off homes. Unfortunately, property taxes never really go away. Even if you own your home outright, you still have to pay them every year. Think of it as rent you pay to the government for owning the land. The only way to stop paying property taxes is to sell the property or pass away. But there are some options. Many local governments offer senior tax deferral programs, where taxes are delayed until the home is sold. This can be helpful for older homeowners on a fixed income. But remember, it's not forgiveness. It's just a delay. Eventually, it must be paid. Number 16. What are special assessments and how are they different? In addition to your regular property tax, your local government might charge a special assessment. This is a one-time or temporary charge for a specific project, like building a new sidewalk or sewer system in your neighborhood. Unlike general property taxes, special assessments usually apply only to the properties that directly benefit from the improvement. So if your street gets a new drainage system and others don't, you get the bill. Not everyone in the town. It's important to read your property tax bill closely. Special assessments are often listed separately, and they can add hundreds or thousands of dollars. Number 17. Do property taxes apply to land only? Nope. Property taxes apply to both the land and any structures on it. If you buy a vacant lot, you'll pay less in property taxes at first, but once you build a house on it, your assessed value will go up, and so will your tax bill. This is why many people who buy land to build later are surprised when their taxes double after construction. Even sheds, garages, or guest houses can increase your tax bill. Always consider future taxes before adding new buildings or improvements. Number 18. Are there ways to estimate future property taxes? Yes, you can estimate future property taxes, but it's not an exact science. First, look up your local tax rate. That's often available on your county's website. Then, estimate your home's future value. Multiply the assessed value by the tax rate to get a ballpark figure. For example, if you think your home might be worth $300,000 in 5 years and your local tax rate is 2%, your future annual tax bill might be around $6,000. But remember, tax rates can change too, so use this method as a rough estimate, not a guarantee. Number 19. Why is property tax important for home buyers? If you're shopping for a new home, property taxes should be part of your budget. A house might look affordable at first glance, but add in a high property tax, and the monthly cost can balloon fast. For example, two homes might both be priced at $300,000. But if one has a tax bill of $3,000 a year and the other is $8,000 a year, that's a huge difference in your monthly payment. Also, some mortgage lenders factor high taxes into your loan approval, so always check property tax history before you buy. It could make or break your budget. Number 20. Are property taxes deductible? Here's some good news. In many cases, yes. Property taxes are tax deductible on your federal income tax return, but there's a limit. As of now, the IRS allows you to deduct up to $10,000 of state and local taxes combined, including property taxes. This is known as the SALT cap. If you itemize your deductions, you can include your property taxes, but if you take the standard deduction, you won't get the extra benefit. Talk to a tax professional to make sure you're getting the most out of it, because every dollar counts. And now, let me ask you something. Did anything about your own property taxes surprise you today? Or do you feel more confident understanding what's on that bill? Drop a comment below and tell me what you learned, or what still confuses you about property taxes.